Welcome to This Explainer. Today, we're going to completely redefine what it means to build wealth. I mean, if you've ever felt like managing your money is basically a second full-time job, trust me, you are not alone. But what if the whole idea that financial success requires constant hustle and never-ending stress is just entirely wrong? Today, we're turning conventional wisdom completely on its head.
Okay, let's dive into this, because the concept we're exploring today might sound a little ridiculous at first. Being lazy? Really? But I want you to imagine two people trying to build a house. The first person spends literally every single weekend carrying bricks by hand, sweating, exhausting themselves, and probably ruining their lower back week after week. The second person, though, they spend just one weekend building a machine that carries those bricks automatically. Years later, they both have houses, but the first person spent thousands of hours working way harder, while the second person spent those same hours actually living their life. Well, building wealth works in a surprisingly similar way. The richest people aren't always the busiest investors. They're just the ones who build a machine.
Let's meet Ben and Olivia. They're both 30 years old, they earn similar salaries, and they share the exact same dream of becoming financially independent. But their approaches? Completely opposite. Ben believes that getting wealthy requires constant, daily effort. Every single morning, he's checking stock prices, and hey, we all know a Ben, right? Every afternoon, he's glued to market news, and every evening, he's reading investment predictions. It is exhausting. Olivia, on the other hand, takes a seemingly lazy approach. She doesn't read the daily markets. She doesn't check her portfolio every morning. So what exactly is she doing differently?
Well, Olivia simply spent one Saturday creating a system. Her entire financial life is built on automation. Her salary deposits automatically, her savings transfer automatically, her monthly investments into a diversified index fund, yep, those happen automatically too. Even her bills are paid automatically. She spent a few hours setting this whole shebang up on a weekend, and then she closed the app. For the rest of the month, she barely even thinks about money. She has built her brick-carrying machine. Think of this setup kind of like a factory conveyor belt. If a factory doesn't have machines, workers have to manually pick up and carry every single box. It's slow, it's prone to error, and it takes constant human energy. But once you install a conveyor belt, the boxes just keep moving, and your finances can work exactly the same way. Every payday, a portion of your income automatically moves right into your investments. No reminders needed, no excuses, no emotional decisions at the end of the month where you suddenly decide you'd rather spend that money on a new gadget. Your system just keeps working, whether you're busy, traveling, or sound asleep.
This actually perfectly maps onto the old fable of the tortoise and the hare. Ben is absolutely the hare. He's fast, frantic, and constantly chasing the hottest trends. One month he's buying up tech stocks, the next month he pivots to energy, then crypto, and then whatever the subreddit of the day is telling him to buy. He's darting all over the place. Olivia is the tortoise. She doesn't chase a single trend. She just invests the exact same amount every single month into her diversified funds. Her strategy is incredibly boring. But here's the secret. That's exactly why she sticks with it. Boring consistency beats frantic trend chasing almost every time.
And this brilliantly illustrates the concept of the robot investor. It's no secret that Wall Street relies on algorithms for the vast majority of trades. So this is simply applying that emotionless logic to your personal wealth. Imagine you could literally hire a robot to manage your money. This robot never gets emotional. It never panics when the news is bad, and it never gets greedy when the market is booming. It simply follows your instructions to the letter. When the markets rise, the system invests. When the markets fall and everyone else is panicking, the system still invests. By automating the process, you remove the absolute biggest obstacle to building wealth, human emotion.
Let's look at how this plays out in daily life. Ben buys an expensive coffee every single morning. It's just a habit. Olivia enjoys coffee just as much, but she decides to make it at home a few days each week. But the real magic here isn't just about saving $5. It's about avoiding decision fatigue. She doesn't have to consciously choose to transfer that money or wrestle with her willpower every day. She simply lets those small savings flow automatically into her investments. The system does it, removing the cognitive load entirely. Over time, those automated, zero-effort decisions compound into something massive.
That compounding effect is what we like to call the snowball machine. Imagine you're standing at the top of a snowy hill. Instead of pushing a snowball down the hill by hand every single day, you build a machine that gives it one gentle push every morning. As the snowball rolls down the hill, it gathers more snow, getting larger and larger. At first, your monthly deposits are doing all the heavy lifting. But years later, your investment returns actually begin generating their own returns. The machine takes over, and your money starts carrying the workload for you.
Think of it like planting an orchard. If you plant an orchard, you don't walk around with a watering can watering each individual tree by hand every hour of the day. That would be impossible. Instead, you build an irrigation system. Once it's built, every tree receives water automatically. Your financial plan should work the exact same way. It shouldn't depend on you waking up feeling perfectly motivated every day to save and invest. It should depend on a cleverly designed system that runs in the background. Automation creates consistency, and consistency is the only way to create compound growth.
Section 1. The real secret: avoiding unnecessary work.
Now, I do need to clarify a crucial misconception here. The lazy way to wealth doesn't mean doing absolutely nothing. You're putting in the effort up front to build the machine, so that you never have to carry the bricks by hand again. As you probably already know, the upfront heavy lifting really comes down to 5 foundational steps: creating a baseline budget, building the emergency fund, killing high-interest debt, diversifying, and then, the real magic step, automating the entire thing. Yes, this takes focus, but once this system exists, all of your future financial decisions become effortless. You do this work once, and it pays you back for the rest of your life.
Let's move to and see how this builds over time. So, both Ben and Olivia begin at day 1. Fast forward 5 years. Ben is exhausted. He's been constantly switching investments, reading the news, trying to predict the next market move. Sometimes he's right, sometimes he's wrong, but he is always busy. Olivia spent those same 5 years focusing on her career, learning new skills, traveling, and spending time with her family, all while her investments quietly continued in the background. Now, fast forward 20 years later, Olivia's wealth has absolutely exploded through decades of consistent, automated compounding. Ben remembers thousands of hours spent stressing over charts. Olivia? She just remembers that one Saturday she spent building her system.
So, the crucial point is, what actually is the lazy way to become rich? Well, it's not about a lack of ambition. It's simply about stopping the cycle of making the same exhausting financial decisions every single month. It's about realizing that every hour you spend manually chasing the market, stressing over daily fluctuations, is an hour your system could have been quietly working for you while you just lived your life.
The ultimate strategy is beautifully simple. Build a system once, automate your savings, automate your investing, own diversified investments, and then stay out of your own way and give compounding time to work. Look, the market will rise and the market will fall. Your life will get busy and complicated. But the wealthiest long-term investors are almost never the ones making the most trades. They're the ones making the fewest unnecessary decisions.
Which brings us to this powerful final thought. The goal isn't to work less in life. The goal is to make your money work more so you don't always have to. Sometimes the absolute smartest financial strategy is just building a solid system and letting time do the rest of the heavy lifting. So, I'll leave you with this question to ask yourself today. Are you still carrying your bricks by hand, or are you ready to finally build your machine?